And joining us for a closer look on what's playing itself out on that market scene is Makwe Masilela from Makwe Fund Managers. Makwe, happy Thursday. Thank you for your time today.
Good afternoon to you and to the viewers.
All right, Makwe, it looks like it's a decent day of trade. We have big macro data coming out of the UK there, speaking of a technical recession. Of course, that's retrospective data. Japan, also news of a recession there, also retrospective data. But it looks like markets are moving it along.
Definitely they are. Remember, markets were brave enough, to just react one day when it comes to that hotter than expected inflation, and just decided to say, listen, we continue to expect that the rates will continue to be decreased this year. The question has been by the scale and the rate. And also now we're seeing that the earnings that have been coming out have been very robust. I guess that is also helping the markets. And yes, Japan itself, we've seen they've lost the third position as the global economy, taken over by Germany, and also because Japan fell into recession. But what's interesting is that there's a likelihood that the Germany itself might fall into a recession. Some of their thinking tanks think that might still happen. And yes, the UK as well falling into a recession. So now you start asking yourself that with all these things happening, because at some point we were expecting some soft landing, are we really gonna be getting those rate cuts? Or maybe is it really happening as we've been worried since October or even the better part of 2023, that these high rate cuts might end up tipping economies into a recession?
I must also ask you, Makwe, that UK economy, what we know, for instance, is that the market in UK is what some analysts refer to as a legacy market. They don't have new, robust, companies listed on their exchange. It is old firms, very similar to what we might see here in South Africa. But the economy as a whole just seems to be battling. And now that we are speaking about them falling into a technical recession, what could possibly boost this market? And has this to do a little with Brexit?
I think more with Brexit, more with those guys have been changing, prime ministers left, right, and center, and we hardly talk about that. But it just shows you that there's some level of political instability, and also this whole issue about Brexit. There's some seriousness when it comes to policy uncertainty, so that continues to affect them, and they might as well lose this theme that they've been carrying, or this whole issue about them being the finance capital of the world, because now, if they don't check up, and the only way that maybe it can help them, the guys might as well become more of a services economy more than anything. The likes of the US, manufacturing is less than services when it comes to the PMI. In my opinion, I think that's the way to go. And the minute they sort out, or the sooner they sort out this Brexit thing, the better for them and all of us.
I want to stay overseas, also just touching on what we're seeing here with NVIDIA. That company continues to shoot the lights out, Makwe. It does look like this AI boom is here to stay. And even when we think there's no more for it to give, it continues to run quite a bit.
I think it's priced for perfection, and we've seen that they've overtaken the likes of Alphabet. But my worry is, we know we cannot go against the trend of the momentum, but really, do we really see this thing being successful? Or is just a question of, hey, this sounds exciting, this sounds doable? Because at the end of the day, we still have to see the practicality of this whole AI. And for now, we all hope and believe that it might work out. So I think we have to be careful for the fact that it's priced for perfection, because any slight disappointment, then we'll see the share price coming down.
Let's bring it back home now, looking at Blue Label Telecoms. They've released a set of numbers there. It actually is a little bit disappointing, but we know that Blue Label Telecoms is trying to do quite a few things. They're trying to bring a Cell C on as their majority shareholder. They're also quite involved in the recap. It's a bit of a journey for them. I'm wondering what markets were expecting versus what markets have then seen.
I think there's some bit of a light at the end of the tunnel. I mean, look, last time they had that negative contribution, I think just over 400 million. Now there's more of a 65 million positive contribution, and all related to the recapitalization of Cell C. And yes, besides that, we know that they had to have increased expenses relating to the distribution agreements. So that also had an impact. But look into their core headline earnings per share. I think they jumped over 1,000%. But yes, unfortunately, unfortunately, the headline earnings per share were down 22%. Yes, they still have a long way to go, and we know that that market of Cell C, if you get it right, if anything we can learn for anything from the likes of Vodacom and MTN, probably Cell C should be doing okay going forward.
Would there be a case at some point to list Cell C on its own, to really give investors visibility about what's happening with it as a business, better visibility?
At some point, there was that expectation, and even before the likes of Blue Label got involved. But as it stands now, I don't think they want to do that up until they grow this whole thing and clean up everything that they need to clean up, because scrutiny there will be more serious.
Also, just looking at our stocks this afternoon, Makwe, Sibanye, Implats, Northam, those are the four that normally get a beating, on any other day. But today they seem to be doing okay, most of them up by more than 2.5%. It's driving our miners to be seen in favorable light today.
They are, and remember that coming from a beating, as we've been seeing that, when things are not looking okay, the miners, they happen to be one of those culprits. And also, I think people are starting to have great expectations about the economies going forward, especially the Chinese economy. We expect them that, yes, after maybe this weekend of the Lunar Year holiday, they might maybe come with some nice announcement, especially more of a fiscal stimulus that markets have been looking for.
We also see South 32 down more than 3% there, even after the board went on to approve this US zinc mine. I'm wondering how markets did not receive that well. I mean, of course, it is a money out, so it is not money in the pockets of investors immediately. But there's a plan here, and it looks like if this comes to fruition, it could be greater for shareholders.
Definitely, and we have to be careful about that. Yes, this is positioning them nicely, diversifying, and the guys getting nice exposure, when it comes to the low carbon future. But now this thing was going to cost more than what was initially anticipated. And we've seen their revenue that down by 15%, dividend per share, I think, is down 92%, profit as headline earnings per share down 90%, and all because, or maybe it's a clear reflection of low commodity prices and also reduction when it comes to their coal production. And that's happening despite them having record aluminum production. And also when you look into their import cost prices, managed to decrease, but still the guys' revenue unfortunately continue to go down.
Mark, I must ask you, a lot of our miners, of course, have seen this commodities downturn. It has been a difficult period for some of them, not all, but a lot of them. At the same time, they're on the prowl for these green assets. There aren't many of them available throughout the world. It's going to take heavy investment. Can we expect it to be a bit of a tricky time for miners as they try to see commodities recover and as they look for investment?
Mining, we have to realize that it's something that can only happen within a certain period. It doesn't grow. Whatever you have mined out, it does it full stop. And so, yes, as we are saying, it takes sometimes to get to full production, and it takes a lot of money. So you have to have some patience to make sure that they at least get to that point. But more importantly, for the fact that mining, whatever you've mined out, it does it, then you have to continue to pay us dividends, because that's the only way we can benefit. We don't have the 30 years to be with you. Whatever short period we're involved with, please reward us nicely. So it continues to be a very tough operating environment, and competition now is serious, and we're all happy and excited, just like AI, But guys, when it comes to this, call them low carbon minerals, we still have to see whether they will really fly, because the guys who are involved in fossil stuff like that, they'll continue to put pressure to make sure that they still get their commodities to be used going forward. So I'm not saying it's not going to happen, but for me, it's not just clear cut like that.
Got you, Makwe. Makwe, I want to get your stock pick, but then I'd like us to first reflect on counters that have found a favor with your industry peers.
Look, I'm going for Alibaba. I mean, and it's purely on a valuation basis. China has got to stabilize, get a little bit better going into the future. The future's got to have some promise for companies like Alibaba. And this thing's down from 300, Hong Kong dollars to 70. I mean, this is the lowest price it's been in a substantially, in a long time period. So it's a pure valuation thing on Alibaba. I think it's just got too cheap now.
I'm going for Adyen. It's a company that I actually recommended a long time ago. It's a payment platform based in Holland, in the Netherlands, and that it went through a rough time because I think there was a little bit of arrogance in that. But the product they produce is really good. It's a fintech business, that helps where everything comes together. You can do marketplace, you can do e-commerce, you can do point of sale. Those are the machines that you swipe, like Capital Appreciation has here. But it's come back from the dead. And I think management listened to its shareholders and listened to its customers, and they bounced back, recovered all their losses, and still I think it's a lovely, really good play in that area.
It's going to be a commodity company again, and not gold this time, oil. It's called EOG Resources. It's an offshore company, American company, and it really does exploration and development of oil resources. It's really, when we look at a market, we talk about them, it's actually quite expensive at the moment. This share is down about 15% for the year, but it has a 3.5% dividend yield. And it's only got a PE of about 9. So this is not a company that's expensive. This is a company really that does, I'd say it's one of those companies that prints cash.
Okay.
It really does. Gold, oil and gas are not going away, and certainly the development thereof is going to become a feature, especially in the US. So not a high growth stock, but a nice dividend player that you're getting at a decent valuation, and there's not a lot of that out there right now.
And Makwe, keen to get your thoughts on some of those stocks. We have Alibaba, we have Adyen, and we also have Enron Oil and Gas Company, so EOG.
All very interesting, but my worry is all the three of them that trading on hope, and reality says something else. Because as we are talking now, we've seen China, they've not been too nice when it comes to their tech companies. And then I don't know it that much, but for the fact that is involved in the payment system, we know there's some serious competition as we are talking today, smarter ways how people starting to transact. And also when it comes to the oil and gas story, that all depends on what's going to be happening with the economies of this world going forward and what pressures are people going to have. But the reality is, as we're talking now, there's just so much pressure for people to stay away from the likes of oil. But yes, only if those hopes come to fruition, then definitely those stocks will do well.
So much uncertainty in the world, Makwe. Which counter are you going with today?
I'm able to short, that is to sell down at the S&P 500, and there's an instrument called SPXU. Reason being, we know that trees don't grow to the sky. And as it is, we expect some form of consolidation, where there's going to be some form of data disappointing the markets or people feeling that it's about time to take profits.
Fantastic, Makwe. A pleasure having you. Thank you so much for talking to us today. That was your midday markets update with the Makwe Masilela from Makwe Fund Managers.